Coming up on Business Incorporated. Reserve Bank of Zimbabwe cracks down on illegal forex dealers. And Egypt's iron and steel exports rise 197%. Central Bank of Kenya retains base lending rate at 7%. Welcome to the program. Let's start on the African continent. Sentiment was mixed at intraday. Nigeria's NGX is trading in the green, up marginally by 7 basis points, while South Africa's JSE index is back with positive movement, up over 0.5%. In other parts of Africa, the EGX 30 is down over 56 basis points. Kenya closed negative to end Tuesday's session, down 0.49%. Meanwhile, major markets in the Middle East were trading in negative territory at intraday. Abu Dhabi lost 0.33%, and Dubai is also down 0.15%. Elsewhere in the region, Saudi Arabia lost 36 basis points, while Qatar was the only gainer, up 0.39%. And European investors are closely watching movements in U.S. markets after the Nasdaq Composite dropped 2.83%. Also, EU economic sentiment improved in September after declining in August. Let's see what's moving markets in Europe now with Ashtuz Pandey, live from Frankfurt. Great to have you on the program, Ashtuz. Well, the European Commission's Economic Sentiment Index rose unexpectedly in September. Can you tell us more about this? Hello, Ashtuz. Hello, Ashtuz, can you hear me? All right, I guess we missed Ashtuz there. We'll try and get Ashtuz back. Moving on now, let's see what's happening in Asia, where Asia-Pacific stocks largely fell in Wednesday's trade following an overnight tumble on Wall Street, with the Nasdaq plunging nearly 3% as bond yields actually rose. In Japan, the Nikkei 225 slipped 2.12% to close at 29,544 points, while the Topix index dropped 2.09% to finish the trading day at 2,038 points. Mainland Chinese stocks also saw sizable losses on the day as the Shanghai Composite shed 1.83% to 3,536 points, and the Shenzhen Component fell 1.64% to 14,079 points. South Korea's Kospi declined 1.22% to close at 3,060 points. The S&P ASX 200 in Australia fell 1.08%, ending the trading day at 7,196 points, while MSCI's broadest index of Asia Pacific shares outside Japan shed 0.73%. All right, let's see if we have Ashtuz now. Hello, Ashtuz, can you hear me now? Hello, Ashtuz. Hello, Ashtuz, can you hear me?
I think so.
All right, Ashtuz, so the European Commission's Economic Sentiment Index rose, unexpectedly in September. Can you tell us what's driving this? All right, seems that we're having issues getting Frankfurt there. Let's move on now to our next conversation. Well, Africa is now the second fastest growing region after Asia, with annual GDP growth rates in excess of 5% over the last decade. But one key component of inclusive development is financial inclusion. And we have an area in which Africa has been lagging behind other continents. Less than 1 adult out of 4 in Africa have access to an account at a formal institution. How does this how can we broaden, Africa's financial inclusion? Well, we have, let's talk to this, we have from Kenya, we have Steve Ogutu, development expert, now to bring us up to speed. Hello, Steve. Great to have you.
Hello, Larry. It's always a pleasure
Yeah.
to be on Business Incorporated.
Yeah, great to have you. So, from a continental perspective, how do you think we're performing in terms of financial inclusion?
Right. I think if you look at Africa, especially in the last decade, we have really been doing great in terms of financial inclusion. I think this is largely because for a very long time, the continent has had a huge population that has been excluded when it comes to financial access. And so that this doubled with the coming of technology and the growth in mobile money and stuff like that. Now we have many people now are able to access finance, both women, youth, and people of all social status. And also, we have also seen more Pan-African banks coming in place, like the Eco Bank, the Equity Bank, and these are replacing some of those, foreign banks. And so some of these things are what really explains why we have some growth in terms of financial inclusion. Though, even with this progress, we still have a long way to go.
All right. So, looking from your viewpoint now, what measures must African governments and other business actors put in place to ensure financial inclusion, especially during and post COVID-19?
Right. I think for the government, the biggest role of the government is always to create an enabling environment. So the government in Africa must focus on putting in place, policies and legal frameworks that allow for the deepening of financial inclusion. And for the business, I mean the business actors like the financial institutions, I think it is time they begin being innovative, utilize the growing digitization to come up with digital products that are able to be accessed by many people. I think that doing this will help to bridge that gap that is still existing. I said we have made some progress, but we still have a long way to go in terms of achieving financial inclusion for all. And I also think that we recently launched the African Continental Free Trade Area. I think this is another area that African governments must really focus on. I think it's going to be really a game changer when it comes to deepening financial inclusion in Africa. So I think each government should look at, how to domesticate the African Free Trade Area agreement and see how best to align those goals to their own economic policies, and try to connect that to address the growing to grow the financial inclusion in their respective countries. I think
All
this
right.
is going to be really a game changer
Right.
in the coming
So,
decades.
yeah. So, what are some of the financial innovations that you think can enhance sustainable financial inclusivity right now?
Right. I think, like I've stated before, the biggest tool to use to deepen financial inclusion right now is actually focusing on the the digitization of financial services. We have seen some financial institutions trying to come up with products, targeting farmers, targeting young people, targeting women, and so we just need to see more of that. We've also seen other non-banking entities coming up with mobile money products. Like in the case of Kenya, we have the M-Pesa that has become really has brought some really transformation in terms of how people transact and do business. We've had countries like Cote d'Ivoire that have been ranked as one of the best countries in Africa when it comes to mobile money technology. And so I think we just have to be innovative, take advantage of technology to deepen financial services to the last mile, as it were.
Right, right. And I know mobile money tech is actually big in Kenya right now. All right, Steve Ogutu, we'll have to leave it there now. Thank you so much for joining us on Business Incorporated.
Thank you very much, Larry, and have a good afternoon.
You too. All right, so let's get back to Frankfurt now with Ashish Pandey. Hello, Ashish. Great to have you.
Thanks, Larry. Thanks for having me.
Yeah, so the European Commission's Economic Sentiment Index actually rose, unexpectedly. Can you tell us what's prompting this?
Well, it was a surprise, yes. The analysts were expecting it to decline. Remember, it reached a record level in July, but then it fell significantly in August, and then again in September it has reversed course and it's gone up. So that was a surprise. It was mainly driven by the sentiment in the construction sector and as well as confidence among consumers. Consumers have been really upbeat ever since the restrictions have been lifted, and that's the reason why you see that uptick as far as the sentiment, overall sentiment is concerned. Sentiment rose in Germany, in Spain, in the Netherlands, in Poland, but it fell in France and Italy. But the sentiment about inflation also did go up, and that's a cause of concern for the Eurozone.
All right, and Germany's IFO Institute has said that the shortage of materials in the country's manufacturing has, worsened to record levels. That should be a major cause of concern for the economy that's still recovering from the pandemic, right?
Well, absolutely, and it's already taking out the steam, some of the steam from Germany's recovery. We've been talking about this for months now, but the situation has only worsened as over the past few months, and it's just like supply chain bottlenecks, a shortage of shipping containers, and which has in turn it has actually led to higher cost of transportation. All that is making very difficult for German companies to procure raw materials to actually fulfill the orders that they've received post the lifting of restrictions. The auto sector is the worst affected. 97% of the companies, they say that they are facing some sort of a trouble related to supply chain. They are facing problems procuring raw materials, and according to this study. And that is actually a cause of concern, because now the companies are saying that they would be forced to increase the prices of the goods that they produce because the costs have gone up. Remember, shipping has itself become so expensive. And with higher prices, that's going to add to the inflationary pressure that the economy is already facing.
All right, talking about inflation now, we see Spain inflation rates climb to its highest, its fastest pace, about 13 years. What does this say about inflation in other Eurozone countries which are scheduled to actually release their own data in coming days?
Well, absolutely. Just brace for, again, really high numbers this week. That's how it's going to be. And I think none of these economies are going to be spared. Germany, France, they all are experiencing high energy prices. The supply chain issues are having a toll on those inflation numbers. They're pushing them even higher. Having said that, it's still the European Central Bank is not really too worried about it. Just this week, the President, Christine Lagarde, has been saying that these are still temporary factors that are driving the prices, and we should. And she actually warned against any premature winding down of stimulus. So they are still seeing most of the factors that are pushing these prices as temporary. And again, we'll have to see just how far they are willing to go, because the markets, some parts of the markets are beginning to actually get nervous. They feel that some of the elements that are pushing the prices are actually quite broad-based, and they are not only temporary factors that are pushing them up.
So rising prices everywhere. All right, Ashish, thank you so much for the update, and enjoy the rest of your day. All right, after the break, we look at more stories from the African continent. That's in a moment. Do stay with us. Welcome back. Now to our next conversation. On the backdrop of the Africa Continental Free Trade Area, cross-border trading from one African securities exchange to another comes a step closer after the African Securities Exchange Association signed a contract to procure an order routing system. What impact will this have on the African capital markets? Well, I'll be having this conversation with Maya Maparata, Head of Markets, Southern African Times Media. Great to have you on the program.
Thank you for having me.
Yeah, so what is this African Exchanges linkage project? Can you paint a picture of it?
Yes, sure. The African Exchange Linkage Program is an initiative of the African Securities Exchange Association, which is a grouping of about 21 of the 29 stock exchanges across the continent. And this project, it's aimed at easing the order filling, which in essence is actually the buying and selling of stocks and exchanges across stock exchanges that may be located outside different geographical locations within the continent. So its aim actually is to boost investment and to boost flows and to increase liquidity across the securities markets.
All right, but how does it work really? Like now, if I'm in Nigeria, so I can just, purchase a stock, maybe say on the Johannesburg Stock Exchange?
Indeed, that is the aim. But at this stage, it's only composed of 7 stock exchanges, where countries within these stock exchanges can sell, but on a pilot level. But the aim ultimately is to enable the order filling that can be done across geographical borders within the African continent.
Okay, so if its aim is to boost that trading between African stock exchanges, how does that help investors and African businesses, and ultimately how will it benefit Africa as a whole?
Well, I'll divide that into 2. There is the investors. For the investors, it increases the ease of doing business. In the backdrop of the pandemic right now, the whole world's travel is restricted. And at present, the way that business or securities are sold, it has to involve a broker. And in most cases, you have to walk into their offices to make these purchases. And this is a system that makes it easier to conduct this business because it may be moving online. And I can almost certainly say, eventually it will be an app on a phone where you just pick an app from wherever you're located in your lounge or wherever and buy a stock. And so for the investor, it increases the ease of doing business. It also increases profitability to an extent because now you have a variety of stocks. If I'm located in Zambia, for instance, I'm no longer confined to Zambian companies. I can invest maybe in Morocco. And if a stock is performing better in Nigeria, I can buy a stock in Nigeria regardless where I'm located in Africa. So there is a higher chance of you making higher profits if this comes into play. Also, for the investor, it makes it predictable. It's predictability because obviously with the coming of these exchanges, it will necessitate a homogeneity of laws and regulations. So it won't be like this situation where each exchange makes its laws according to the country within which it is located. So if I'm doing business in Namibia, for instance, I can then know that these same regulations that apply in Namibia will apply in Egypt. And so
right.
it increases working with that.
Okay, so there are about 29 stock exchanges in Africa. So how significant is this impact to the whole continent if the linkage is just with only 7 exchanges?
Yeah, that's a good question. But we have to note, first thing, this is a pilot project, which means it's a test phase. And the good news is that it's initiated by an association with 21 of the 29. So by extension, we can extrapolate that if the project is done well, then we can expect it among at least those 29, if not more. But then there's also this dimension that comes into play. Of those 7 that are in the pilot project, which include Johannesburg Stock Exchange, Casablanca Exchange, Nairobi, Nigeria, Mauritius, what's the other one? Oh, yes, and the one for the Western African Economic Money Union. The African market capitalization standing at about 1.5 trillion. And these 7 make up about 80% of that market capitalization. So we have to note that in so much as it is a pilot project, but it's involving about 80% of the value. So definitely it's going to be representative of ease of doing business in the exchanges going forward.
All right, Admai. Well, on the backdrop of the recently signed Africa Continental Free Trade Area, which seeks to develop continents through integration, will we say this linkage of the markets is a step towards that goal?
Certainly, it definitely is. The African market is composed of about 1.3 billion people, and by GDP combined, all the 54 nations come up to over 2.5 trillion, almost 2.6 trillion. And if the continent itself was a single unit, was a single economic unit, it would definitely mean that among the list of the world's most developed nations by GDP, Africa would stand maybe top 5 in the world. So what this African free trade is doing is to encourage business among Africans. But unfortunately, or fortunately, it's mainly concentrating on the physical merchandise and services. What this project now does is it also extends that intertrade within Africa to include securities and stock options along the African board. So definitely it's dovetailing into the main theme where Africa is looking towards itself and also increasing its value, because fragmented, it's not as powerful. I'm sure, as you know, 10 of the West developed nations in the world are found within the continent. But this continent combined has value and definitely has a bright future if it's working as a single unit.
All right, it'd be great to buy, stocks from wherever I am. That would be a nice way to make some profit. All right, Admaya Maparadza, Head of Markets, Southern Africa Times. Thank you so much for coming on the program today, and enjoy the rest of your day.
Thank you. Thank you. You too.
All right. Okay, moving on to other stories now. The Reserve Bank of Zimbabwe has ordered banks and other financial services providers to immediately freeze accounts belonging to 30 nationals who are ringleaders of parallel market foreign currency dealers destabilizing the economy. A recent update, the RBC had identified individuals who are abusing mobile telecommunication services and other social media platforms to facilitate illegal foreign exchange transactions. Financial Intelligence Unit has instructed banks and mobile money operators and other financial service providers to identify and freeze any of such accounts operated by these individuals, further to also bar them from accessing financial services for a period of 2 years with immediate effect. And Egypt's iron and steel exports in the first 8 months of 2021 have jumped 197% to $1.097 billion from $369 million in the same period last year. In August 2021, exports rose to $177 million from $60 million in the same period, according to the Egyptian Court Council for Building Materials. Egypt has exported iron and steel to 76 countries in January. August period this year, including 18 markets that were not included in the January-August 2020 period. They are Pakistan, Djibouti, Ireland, and others. And the Central Bank of Kenya has retained the base lending rate at 7% after its monetary policy meeting. Governor noted inflationary pressures were rising domestically and internationally. Overall, stood at 6.6% in August 2021 compared to 6.5% in July, largely due to increase in fuel and food prices. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.